Job order costing. Job order costing is used in a manufacturing environment. This is used when there are many different individual types of products that are being manufactured, and each project is unique. There are unique challenges to record the journal entries for job order costing, maintain the job order cost sheet, and accumulate information for the financial statements. There are two arenas for an accountant in job order costing. One arena is the general ledger accountant, and the other one is the managerial accountant. Typically, these are separate duties, or two separate people perform these duties. The general ledger accountant is concerned with the accumulation of journal entries necessary to prepare the financial statements. The managerial accountant is concerned with the accumulation of direct materials, direct labor, and overhead costs on the job order cost sheet. This is necessary to cost out a particular job and provide a per unit cost for use by the general ledger accountant. Manufacturing overhead and job order costing. Manufacturing overhead uses a predetermined rate which is applied to a job based upon the job activity that drives the overhead. Typically, the driver is direct labor hours or machine hours. So in other words, you look at what is causing the overhead. Is overhead being caused by the fact that you're using direct labor hours or the fact that you're using machine hours? Other types of drivers exist, but typically these are the most often seen in textbooks. The predetermined rate is determined at the beginning of the accounting year. It is comprised of all projected overhead costs, both fixed and variable, divided by the projected volumes of the driver. The number of hours, direct labor hours, or machine hours. So in other words, we accumulate all our projected overhead costs for the entire year, whether fixed or variable, and then we're going to divide them by the projected volume of the driver, whether it be number of direct labor hours or machine hours. This process is usually done during the budget phase for the upcoming year. This predetermined rate is then recorded both on the job order cost sheet and in the general ledger based upon the actual volumes of the driver for the current period. This process is called applying overhead. So in other words, if you expect 12,000 machine hours in a particular month, and in a particular year, and for a particular month you only have 900 machine hours, 900 would be the number of hours that you would use to apply overhead, instead of the expected 1,000 each month, which would equal the 12,000. The predetermined rate helps to avoid fluctuations of costs by averaging out the effects of the overhead costs and allows for a comparison of similar jobs completed in different time periods. So in other words, you're not going to incur actual overhead costs at the same rate for each month. You're going to record property taxes in one month. Utilities will vary and be higher in some months as opposed to other months. And so by using a predetermined rate that averages out the cost of overhead throughout the entire year, it means that all of your jobs, whether performed in June or December, depending upon when electricity might be higher or lower, will be comparable because you're going to be using the same rate to apply to all of the jobs. Inventory accounts. Manufacturing accounting requires 3 inventory accounts, so you don't have just one inventory account like you do when you have a merchandising enterprise. Raw materials is the first inventory account. It's held in a storeroom and is requisitioned for use on the shop or factory floor. It is the inert direct materials. Those in turn are requisitioned and placed in work in process on the factory floor. This is inventory under production, to which you're going to apply overhead and direct labor and convert it into a product. WIP includes raw materials, direct labor, and applied overhead. WIP is always equal to the job order cost sheet. It is the general ledger reflection of what is going on the factory floor on the job order cost sheet. Finished goods. Once goods are finished and completely manufactured and in their final phase and final completed, that's moved to finished goods. This is where completed work in process units have been transferred to the store or are available to be shipped. The following is a series of slides depicting manufacturing transactions which compare the different effects of these transactions between the general ledger accountant and the managerial accountant. The company purchases raw materials on account. In the general ledger, raw materials, an inventory account will be debited and accounts payable will be credited. These materials are placed in the raw materials storeroom. No recordation required, however, for the managerial accountant on the job order cost sheet. These materials have not been requisitioned for use in production. In other words, they are not yet in WIP. The raw materials inventory clerk is given a requisition for $52,000 in materials. Direct materials in the amount of $28,000 are needed for job A and $22,000 are needed for job B. This requisition includes indirect materials in the amount of $2,000. The general ledger accountant will be recording work in process for the direct materials and overhead for the indirect materials. And this will also show, this general ledger journal entry will also show the movement out of raw materials into work in process. The requisition includes $50,000 of direct materials and $2,000 of indirect materials. Indirect materials by definition are overhead. Therefore, the indirect materials are recorded in an account called overhead. The overhead account is debited for the actual overhead costs as they are incurred. Overhead is a clearing account. So we will be recording both actual costs and overhead as well as applied costs and overhead. All of the actual costs, which this represents, this journal entry here, are debited in the overhead clearing account. And remember, indirect materials are overhead because they are not large enough or important enough to be considered direct materials. They're inconsequential, and therefore they are indirect. Direct materials, by definition, are materials which are large enough and consequential enough to be assigned to a particular job. Now let's look what's happening in the managerial accountant job order cost sheet. Job A had a beginning balance of $30,000, and so now we're adding to it the direct materials for job A of $28,000, $22,000 for job B, the total of which is $50,000. These direct materials have been requisitioned for use in the production of inventory, or now are in WIP. So we said WIP would always equal the job order cost sheet. Therefore, they are recorded on the job order cost sheet. The job order cost sheet is kept by job and in total. Reminder, the job order cost sheet will always equal WIP. Overhead will not be applied to the job order cost sheet until the end of the period when the volume of the driver, in this instance that we're using, machine hours, will be known. So we can't apply it until the end of the month when we know the total machine hours. Factory payroll is prepared. Remember, everything related to factory is going to have components of overhead because it's related to the factory. Time tickets show wages for job A are $40,000 and for job B are $20,000. The entire factory payroll is $75,000. Therefore, the remainder is indirect labor or overhead. The general ledger accountant will record work in process, the direct labor of $60,000. The indirect labor or overhead will be recorded in the overhead account, a debit to the overhead account, and then the credit to salaries payable. Work in process is debited for the factory wages of job A and job B. The remainder of the factory payroll must therefore be indirect labor. Since this payroll is factory related, indirect labor is by definition overhead. As with the case for indirect materials, the indirect labor is recorded to overhead. The overhead account is debited for the actual overhead costs as they are incurred. And we see now that we had a $60,000 recordation of direct labor to work in process. And we said that work in process mirrors what's the job order cost sheet, and the job order cost sheet mirrors WIP. So we see direct labor for job A, direct labor for job B, and the total, which equals the total in WIP for direct labor. Direct labor has been incurred during the production of inventory. Therefore, it is recorded on the job order cost sheet. Overhead will not be applied to the job order cost sheet until the end of the period when all of the machine hours will be known. The company incurs additional overhead items during the course of the month for factory-related items such as utilities and rent, property taxes, prepaid insurance, and depreciation. Since it's factory-related, they are going to be considered overhead. So we have overhead for, this represents utilities and rent in the amount of $40,000. Again, we're paying actual costs. And then we have an accrual here. So we have overhead, property taxes payable, and we're also having an adjusting journal entry related to prepaid insurance. Again, these represent actual amounts, actual incurrence of overhead. And then we have the depreciation. So instead of having depreciation expenses, because it's related to the factory, it's considered overhead, and then we will be crediting accumulated depreciation. These costs are recorded to overhead because they are all necessary for the operations of the factory. The overhead account is debited for the actual overhead costs as they are incurred. And on the managerial accounting side, we see that none of these costs have been included on the job order cost sheet because none have been recorded to WIP in the general ledger. Overhead, again, will not be applied until the end of the month. The factory foreman informs in counting that 10,000 machine hours were used for job A and 5,000 machine hours were used for job B. The predetermined overhead rate is $6. So now we're going to record in work in process the total value of the overhead that we are applying for this job. So 10,000 plus 5,000 or 15,000 times $6 is 90,000. In this instance, we are going to be crediting overhead. Overhead is credited when overhead is applied to work in process. So here we have all the individual debits to overhead, and then we have the credit. This shows that $95,000 we have as far as actual expenses incurred during the month of during this month for overhead costs, and $90,000 was applied. We have a balance, a debit balance at present of $5,000. When credits to overhead are less than the debits, overhead is said to have been underapplied. See, in relationship to the actual overhead cost, this is underapplied because it is less than or under the actual cost. If this had been $100,000 and we would have had a $5,000 credit balance, then it would have been overapplied. If the credits are more than the debits, then overhead is said to have been overapplied. Now let's see what's happening on the job order cost sheet. We said it's going to be mirroring work in process, and work in process is mirroring what's going on in the job order cost sheet. So we have overhead that we're recording, $60,000 for job A, $30,000 for job B, and $90,000 in total. The job order cost sheet reflects the overhead applied. So again, overhead applied to both jobs. Again, the job order cost sheet includes direct materials, direct labor, and overhead, as well as any beginning balance for each job. The company now pays for non-factory related expenses such as salaries, depreciation, advertising, and expenses. These are not recorded as part of WIP or on the job order cost sheet. So we have salaries that we're paying. We're going to record depreciation expense and then some advertising and selling expenses. Job A has been completed and all the costs are moved out of WIP and into finished goods. There were 1,000 units completed for job A. So the general ledger account is going to record the fact that finished goods have increased and WIP has decreased. So this shows the accumulated costs associated with job A. As we can see on the job order cost sheet, the costs associated with job A were $158,000. The total cost of job A were $158,000 for 1,000 units, which equates to a cost of $158 per unit. This journal entry also reflects the cost of goods manufactured. So the cost of the goods manufactured and moved into finished goods represents those goods, the cost of manufacturing for the period. Now the job order cost sheet will only have the costs associated with job B. The company sells 750 units of job A at a sales price of $300. The company is going to record accounts receivable or cash for the amount of the sales, and then cost of goods sold for the amount of the cost of producing these finished goods, and 750 of them we sold, and our cost was $158 per unit, and our sales were $300 per unit. And again, we're showing that now they've gone into the income statement, their cost of goods sold, and they've left finished goods an inventory item, and there's no effect whatsoever on the job order cost sheet. The overhead account is closed out to cost of goods sold. No effect on the job order cost sheet. So let's look and see what's going on in the general ledger account. Cost of goods sold will be debited and overhead credited for the balance in the overhead account. So let's look at this again. These are all of our actual expenses, and these were our applied overhead. We had a balance at the end. We had a debit balance of $5,000, so we are going to credit $5,000 in order to zero out this account. So this would be $95,000 here, $95,000 here, which would equal 0. So our accounts that we are always assumed to be involved with closing out the clearing account of overhead will be cost of goods sold and overhead. If overhead had had a credit balance instead of a debit balance, then the journal entry would have been overhead $5,000, cost of goods sold $5,000. Now let's look at a recap and let's see what's going on as we do these journal entries and what's going on in the general ledger and the job order cost sheet. We had beginning balances. Those are the items marked in yellow. And we had the purchase of raw materials, went into raw materials, went into accounts payable. We had the raw materials that were added to work in process. So we had direct materials in the amount of $50,000, overhead in the amount of $2,000 representing the indirect materials, $52,000 representing the raw materials that are now been added to raw materials. And now we have a balance of $15,000. And we can also see that the direct materials were recorded on the job order cost sheet. Work in process, direct labor. This is the recording of direct labor, the factory payroll. $60,000 was associated with work in process, $15,000 manufacturing overhead, $75,000 wages and salaries and wages payable. And we can also see that the job order cost sheet now has direct labor in the amount of $60,000 added to it, separated by job. Now we're going to pay additional overhead accounts associated with actual expenses, property taxes, prepaid insurance, the depreciation, and we're also going to see that none of these were on, let me back that up, none of these were on the job order cost sheet because it wasn't applied overhead. It was the actual expenses of overhead that were recorded. Now let's look at the applied overhead. So now we know how many machine hours. So we had 90,000 in work in process that we're going to add to work in process. Sorry, I repeated myself there. We have 90,000 that we are going to credit to manufacturing overhead. We have a balance of 230,000 in work in process, and we can also see that overhead applied was 90,000 and it was recorded in job A and job B. We can see that the job order cost sheet reflects work in process. We can also see that manufacturing overhead now has a debit balance of 5,000, and since the credits were lower than the debits, since the applied overhead was less than the actual overhead, overhead was underapplied. And we can also see that work in process equals the total job order cost sheets. Now we're going to record non-factory related expenses. Now we're going to move items out of finished goods, out of WIP into finished goods. And we can see that since we moved everything related to job A off of the factory floor into finished goods that is no longer on the job order cost sheet, the balance in work in process of $72,000 reflects what's on the job order cost sheet. These are the sales of 750 items, a sales price of $300, cost of goods sold in the amount of $158,000 divided by 1,000, which means it was $158 per item times 750. That's the total of cost of goods sold associated with the sale, recorded in cost of goods sold, recorded in finished goods as a credit showing that they're no longer in finished goods. Now we're going to close out cost of goods sold. So we're going to debit cost of goods sold for $5,000. And our overhead, we're going to credit $5,000. Now our balances are $95,000 in both debits and credits, so manufacturing overhead will be zeroed out. And this is the final recap.